Hello everyone, this is Andrew McNair from SWAN Capital with our May SWAN Report. In this month's video, I want to discuss some recent headlines that influenced the financial markets in April, but also provide you some perspective on what these developments could mean for you as an investor over the next few months ahead. Now, please stay tuned at the end of this video for some required disclosure statements. Now, stocks rebounded sharply in April, and that's for two main reasons. First, because the potential flattening of this pandemic curve and that positive results circling around a clinical trial were shown as positive signs. But that's healthy news for Main Street. But let's talk about Wall Street. The Dow, which had dropped 14% in March, actually jumped 11%. The S&P 500 rose nearly 13%, and the Nasdaq led all the indexes, surging by more than 15%. Now, a slowdown in COVID-19 infections allowed stocks to turn higher, while a more stable bond market also helped to support this rally. Now, momentum started to stall a bit as oil prices dropped, but gains accelerated once more as they continued to progress as the reopening of economies started to become the dominating conversation. Now, as we look to the labor market, we saw, unfortunately, a very hideous unemployment report. Over the last week, the market interpreted this report actually as good news. They were expecting unemployment at 16% for April, up almost fourfold from March's number. But when the news came in that it was only 14.7%, they thought that was great news, believe it or not. A total of 20 million souls, though, were out of a job in April, with nearly 50% of those in the travel, leisure, and retail sectors taking the brunt of this unemployment wave. Now, if we look at other economic vital signs, for example, volatility, it has slowed down somewhat. And if we look at the volatility index, it's actually below 30 for the first time since the end of February. And this is because of 10-year treasuries that were up as traders were shedding bonds to jump into the market and participate in this rally. Now, in the coming weeks and months ahead, the national dialogue should continue to shift towards restarting the economy. But two key factors really may help investors gauge how fast this recovery will be. The first could be each state's actions. See, the White House has rolled out a three-step plan toward a full reopening of the economy, but it leaves the ultimate decisions to the state, to the governors of each state making those decisions. So we may see states actually participate in the recovery while others do not. Now, the second factor could be public sentiment. How soon will people return to the office to get back to work, going out to eat, or just traveling again? Plus, we cannot even try to extrapolate the impacts on consumer behavior for the long term. People who have chose to stay indoors will be accustomed to staying in at home more often. Also, we want to tell you that we had a great turnout for Shred Week. And if you still have documents that you need to discard, please let our office know, and we're happy to get those documents from you and take care of them for you. That's it for this month's economic update. My name's Andrew McNair, signing off for the month of May 2020.